They say the market is crashing, and it is time to run for the hills. Really? Is it really? Bond yields rise to a little over 2% for the first time since 2019. Mortgage rates react to it and go up 12 basis points to over 4%. Inflation rises to 7.5%. The Dow loses 500 points yesterday. Tries to recover today, then loses another 500 points again. The S&P 500 is down by almost 2%, and the Nasdaq down by almost 3%. Everyone is freaking out. They say this is the great crash they have been talking about. No, it is not. Relax. Feed the geese if you need to. But relax, this does not mean the market may not continue to go down for a while. In fact, it could. However, the numerous prophets predicting a market doom are quick to say they are correct this time around, while refusing to admit all their errors from times past. Don't get it wrong. This is not to say that the market is eternally going up. That is not what markets do. They go up and down. However, considering our present reality, this looks more like a correction, not the end of the bull market. Pullbacks are defined as a drop of about 5 to 10%, and they are very short term. Corrections are a drop between 10 and 20%, and they can last a few months. Bear markets occur after a drop of over 20%, and if that drop lasts over 2 months. If you take these definitions into consideration, you realize the year 2021 lacked any corrections and perhaps was lacking in any real pullbacks. According to asset management and investment firm Guggenheim Investments, the S&P 500 has experienced only 80 pullbacks since 1945 and had 5 separate 5% pullbacks in 2018 alone. If all these don't make sense to you, you are not alone. It is easy to assume that bad economic news is reflected in the stock market. But the stock market is the stock market, and the economy is the economy. They are two completely different things. The stock market of 2022, sadly, is not the same as the stock market from 30, 20, or even 10 years ago. Yes, the names remain the same. The opening and closing bells continue to occur at the same time. However, the market runs on a different kind of fuel. And that fuel is easy monetary policy. Yes, the Fed says they will tighten that policy. But if anything, what the Fed says is different from what the Fed does. Know this and know peace. The rules of the past don't apply. If you go back to 2008, you will remember that when they introduced the magical money printing by the name quantitative easing, it was supposed to be a one-off thing. What happened after that? A simple lesson from history. Once the government have their way, they never stop, and the Fed is the government. Of course, they will attempt to raise rates. It is already happening with the Bank of England. However, the market has already priced this in. In fact, the market may crash if the Fed does not raise rates in March as they have made us all expect. But once they do raise those rates, by perhaps some fraction of a fraction, despite what all the prophets of doom are saying, the market will most likely rally. The market of today is like learning to understand your crush back when you were in middle school. You did everything they wanted, treated them like God, yet they left you for some other dude that treated them like, you know what. Back then, you wondered why that was. It took you a while to understand that humans are complicated. They desire those who don't desire them. It's the same thing with the stock market. The new stock market rallies on bad news. It pursues the news that treats it shitty. When it sees the good, or what you assume it's the good, it may actually correct. Bet you've experienced this a couple times too. You see some abysmal economic news like high unemployment or poor job numbers, and you hurriedly take a short position, expecting to make a quick buck from the trade. Yet, the market shoots up. Here's a secret you must have heard before but most likely forgotten. Your emotions are your worst enemy. Learn to understand them. And with this market, with all that is going on, it is most likely in pullback and correction territory. The expectations of a Russian invasion spooked it today. That feeling will last till sometime next week. However, when you look at the charts, you see that the market seems prepared to rally. And rally, it most likely will. Despite what the prophets of doom say, everything looks like the bull market is still on. These fearmongers seek nothing other than to control your mind. All you need to do is look at the fundamentals. The debt market. As long as the Fed continues to pump easy money into the market will continue to rally. Well, until that day it won't. If you check the fear index right now, you see that retail traders are doing exactly what they did in seasons when they got crushed. And that is, shorting a market that seems ready to rally. Time will tell. But the crash is not happening anytime soon. The market of today is running on free money. The Fed is pumping a ton into it. They totally understand that the inflation is not caused by the supply chain BS, they know it is caused by them. They have Ivy League degrees. They know that increasing the M2 money supply would certainly lead to some devaluation of our dollars. The Bureau of Labor Statistics says that the US dollar loses about 1% of its value every month. Every month. The Fed understands this. Hence, the question, why then are they doing it? Well, they are doing it because that is what they want to do. Nothing is a coincidence. The market will fall someday. But that day is not today. That fall would be cataclysmic. But for now, treat the downturn as pullbacks. That is what they are. You are blessed with a great opportunity to continue enjoying the bull run. Someday it would end. And once again, that day is not today. Those who tell you they have worked out the dates of the crash are wrong. Don't play that game. It's a loser's game. These prophets of doom will continue to be wrong. No one can calculate the day of reckoning for the markets. It will happen when it will happen. For now, pay attention to the fundamentals. The New York Fed has a trading desk. What do you think they use it for? For decorating? Of course, they are buying assets. You too should be going long. Do what they are doing. You can never win the banks. Your profit comes when you follow them, not when you rebel. Don't be part of the over 70% of traders who continue to lose money. Do what the rich are doing. Thank you so much for watching. Please check out our other videos. Until we see again, kindly like and subscribe. It helps us out a lot. Thank you.